Right, should be live. Right, just checking to make sure everything's good. All right, everything seems to be working well. Welcome to the weekend live stream. Just let me know in the chat if you can hear me and see me as well. Right, I believe it should all be good. So if you have any questions or any requests, do let me know in the chat below and I will definitely have a look at it at the end of the stream. All right, so this is one of the additions to our existing weekend sessions where we have clearly outlined where price needs to move and where price needs to go, and it has basically done the exact same thing we're looking for, right? So on dollar index, we expected price to take out buy side, which it did, and now what have we here? Price has really retraced into this newly formed weekly fair value gap, right? So we just plot this one right here. You can see that this is a clear weekly fair value gap, and that is really where price has retraced down into. Now, a tip for you all, whenever you trade with price and you expect price to, let's say, expand, right? What's the first thing you do? You always look at your fair value gaps, right? So you have a nice bullish fair value gap here. You have a nice bullish fair value gap here, which we had a expansion to, right? But in situations like this, it can be a bit more trickier because we have taken out buy side, closed above it, and we have now retraced into a bullish fair value gap, right? So this doesn't mean that price will expand higher, but it means that this move from this high to this low was the high probability move, right? So you have these late longs, as you could like to call it, or late buyers, right? So they buy somewhere here and they see this retracement down there and they might consider this as a support broken and turn into resistance, right? But that doesn't really work exactly the way I said it. It does work when there is a fair value gap and the narrative is still in play for higher prices, all right? So in this case, what my expectations for dollar indexes is going to remain neutral, all right? I don't really expect much from dollar index. Price has not really moved much. It has really just consolidated here, right? So I'll just wait for price to probably consolidate for another week or two. And in my opinion, the month of July, which we are now going to head towards, is going to be low probability and is going to be a lot more consolidating rather than expansion, right? Because price is going to expand and then it's going to consolidate, expand, consolidate, right? So in this case, we have expanded in the month of June. So you can see we have the monthly opening price here and price has expanded, right? And we've taken out buy side. So this just means that we should expect consolidation moving forward. So moving to your daily time frames, you can see this is quite evident here. And this is really how you can also plot with your monthly opening prices and your daily expansions, right? So this is your open, low, high, close. And this is another tip for you here. Whenever you expect price to expand quite aggressively, let's say to buy side liquidity, you will always get a shallow open to low, right? So if this is your opening price, just as a monthly open, you will expect price to form a shallow open low, and then we'll have a large expansion moving forward. So in this case, can we apply the same logic here for the month of July, which we had the monthly open right here? You can see that we didn't really have a nice shallow open just as we did in the month of June. So this is another thing which we can use to determine that this month is going to be rather slow. It's going to be consolidating for a bit. We have a daily fair value gap here. So price will most likely consolidate, engineer liquidity on both sides, and then probably move lower and then higher, right? Or the other way around, it can probably move higher and then come lower. So we won't really know a clear direction until and unless price consolidates, gives us clear information that we're looking for, where the highs and lows are, where it really wants to push higher. And after that, we can really determine if the direction of price. All right. So for now, since this is the first week of July right here, we have the first, second, and third, probably another week, we'll get some sort of consolidation. And after that, we can really determine what the direction is going to be for the month of July. All right. So you will not really know the direction of price at all times, but you will know the direction of price most of the times. All right. So just look at this monthly opening price here as well. We have a nice open low, right, into a fair value gap, right? So you can't really use your fair value gaps without a clear narrative. And this is a nice narrative to see here in play, right? Which is your open, low, high, close. So you have an open, low. And why did price not push lower, right? Why didn't do that? Because price is already manipulated before, right? So if you consider this as your PO3 fractal, you have accumulation, manipulation, and distribution. You can see that manipulation here has already occurred when price tapped into the 50% of the gap, right? So when the new monthly open, in this case, in the month of June, we can expect distribution, right? And that is really what we observed here as well. So price distributed. So are you going to chase price here? Definitely not. And if you can go back to the streams and watch as well, we're not chasing any time. I'm really giving you the clear arrays that we are bouncing off of, right? The clear levels that we're bouncing off of. And we have a nice fair value gap here. And we also have one on the weekly time frame, and price just taps into it and expands quite beautifully, right? So this is a really high probability month for higher time frame direction and for a nice expansion as well. But moving forward to the month of July, we can definitely expect consolidation. All right, that is really what I'm going to go with. So here, if you get to the monthly time frame as well, you can see that we have a nice large expansion. And if you want, you can definitely plot your premium to discount of the dealing range right here, and you have your 50% there. So you can definitely mark out this fair value gap right here and expect dollar index to get there as well. All right, that could be a nice way to determine that dollar index has a bit more room for at least in the month of July or August, which is the following month, where we can expect price to tap this fair value gap. All right, so just always keep it simple. We have a nice swing low, we have a swing high, filled this fair value gap right there before expanding lower, and now a retracement into a fair value gap at 50% of the range. All right, so let's move to Euro USD and see what we have here. So Euro 3-month time frame, this looks really clean. You can see that we have taken out July's high, and now we have taken out July's low of 2025, right? So 3-month chart for each of them. So whenever I give you these directions as well, and I explain how I'm expecting price to move in a particular direction, I do have all of these time frames in mind. All right, so I'm constantly looking through them, though it's not quite often because each candle takes about a month or two to form. So it's definitely a good habit to always look at these higher time frames, and then you can clearly determine where price is going, right? So simple 3-month time frame can show you that price is bearish, especially after this candle closure right here. We have an open high and a low close right into this fair value gap. So it's quite simple. You just go down to the daily time frame and you wait for your individual monthly opening prices, wait for your daily fair value gaps, which is what we did. A fair value gap right there. Go down here once again, we have a fair value gap. Might look like it's disrespecting, but it's not. It's just a retracement into premium and then expands once again. Equal lows, price gets there, right? So judging by everything that we have as of now, I am going to be neutral, all right? There is not much we can do at this point because this is a really nice structure and the price has expanded through from here all the way there. And now we're just expecting price to move lower, which we did. This was a really nice move, which we called, but here I'm going to remain neutral, all right? Because there are two ways price can go here, right? What are those ways? First, you should determine your fair value gap, and that is one right here. You are going to plot your 50% level, right? So the first thing is price can push lower, right? To the 50% of this bullish fair value gap on the 3-month time frame. Now, what's the second thing it can do? It can move higher to probably target the previous 3-month high, right? If you go to the monthly time frame, you can probably see it's quite clear. You also have a monthly fair value gap here, so lower prices could be in play, or it can just move higher from here, right? So if you're going to ask me what is price going to do, I definitely do not know at this point. The move from here to here was called out quite beautifully, but here we are going to remain neutral, all right? You just can't know the higher time frame direction at all times, all right? Because you have to give price time for it to engineer liquidity. It's going to be either at highs or lows, and then you're going to wait for price to manipulate on either side. You're always going to watch your higher time frames to see where it wants to move, where it wants to manipulate, and then you're going to determine your bias or your direction, all right? So that is quite important. So my bias for Euro USD is going to be neutral, especially on these higher time frames, all right? Now what about GU? We were quite bearish on GU, especially to these lows, right? So what has changed until then, right? So this is where your correlated pairs or your SMT divergence will come into play. And this is really beautiful. Let me just show that to you. So this low right here is on the 3rd of November, right? So let me just turn that on. So the 3rd November 2025, that is where this low is, right? And price is taken now an internal liquidity pool right about there, okay? So what do I see here? I see that 3rd of November, which is going to be our draw, or which was our draw after price took out this low. We didn't have any closures, which means we can't expect price to get here. That is where our draw was, right? But if you go to Euro USD, you see the same low right here on the 3rd of November 2025. Price has taken that once and has taken that twice, all right? So you can see it takes out once and takes out twice, all right? So 9th March as well. So if you go back here, 9th March, somewhere around here, this swing low. So we've taken that out here, right? But you can see that this low has not been taken out, and this will be your SMT divergence, all right? Right there, go to Euro USD. This is your SMT divergence right here, okay? So we expect price to move higher from here, right? Especially when we have SMT. So what does this clearly look like? It looks like we have accumulation here, right? This entire range is clear accumulation. This is your manipulation, and this can be your distribution to follow, right? Not really confirmed yet, of course, because just the SMT at higher time frame liquidity doesn't give you the confirmation. We do need additional confirmations to look for. And on GBP USD, the exact same thing here, but GU is quite stronger with the SMT and with this reaction, right? So let's say GU wants to move higher and it closes, go to the daily time frame. So we have this large bearish move, right? So if price wants to push higher and let's say it's closed above this previous monthly open, I would say that GU is bullish and we would probably move higher, right? So until then, it's best to remain neutral, because at this point, there are two things that can happen once again. Price can tap into this fair value gap and move lower. SMT would be invalidated, or this way, invalidated, or it can close above, probably close above these highs, above the monthly open, and then we can be really bullish. Wait for price to form another distribution SMT, and then we can target higher prices, especially to these highs and these highs, right? So until then, we should definitely remain neutral. Great. So let's move to NASDAQ. Now, NASDAQ, I did warn everyone that we are neutral on NASDAQ and we can't really expect price to expand, right? And look at the beautiful open high low close on NASDAQ. You have a nice, beautiful inside week, right? This was your previous week. I connected the stream after and I told you we're going to consolidate. That is exactly what we did. This is pure classic consolidation. We didn't break any new highs. We didn't break any new lows. We just consolidated, or rather accumulated, right between the previous week's highs and lows, right? So beautiful inside week there. Go to the daily time frame. Did we get a clear move? Definitely not. Retail is probably seeing this as a triangle pattern of sort, right? They would probably see these lows here and these highs here, probably wait for a breakout. That's definitely not what we're doing. We need to see price take out a clear significant higher low. So for now, what would it be? It would be your Monday's low and your Tuesday's high. So we have a nice liquidity pools right here, and we also have one here, right? So can price or can NASDAQ form its high here? It definitely could, because we do have a real large expansion here, right? So this was a move called as well on the 3-month time frame. Just use this for value gap and we call this move lower and the low from here to the higher move as well, right? So quite no one else was doing that, but price did give us that. I did not personally expect a reaction here, but we did get a quite nice one. But here, just look at the 3-month time frame, right? Sorry, the monthly time frame. What do you see here? The first thing you need to look at is going to be this fair value gap, right? We have a nice 3-candle pattern right here, and we have a nice fair value gap, and that is where you should look at. All right. Now, does it mean that it's going to move lower from here directly? Not at all, because price needs to follow the system, right? And what is the system? It needs to accumulate, manipulate, and then distribute. So if you're going to expect lower prices, price should accumulate here, which it kind of is, right? But I should definitely see manipulation in the opposite direction, right? So which means price will move higher first, take out these highs, and then distribute lower, right? So that is what they mean when they say if price wants to move lower, it's going to first move higher, right? This is the exact example of what it is. So I don't really see this as a nice fair value gap that price needs to move towards. I just see this as we have a defined range, and we have previous week's range and we have previous month's range, right? This is June, the month of June. You have the monthly open for June, high and low, right? So that's really how I see it. I would definitely say give it some time and focus on your day trades, right? I do live stream every single day during New York session and twice in London in the university. So if you do want to check that out, you can go ahead with the link in description. But definitely do focus on that. I would say stay out of the higher time frames for now. If you are really invested in NASDAQ, I would say your growth could be stagnated for a while. All right. That's what I believe. The same goes with ES, of course. And ES does look quite stronger, in my opinion, because if you look at the same exact range, which you want to plot on, we have Monday's open here. Sorry, Monday's low here, and we have Thursday as the high there. And price has tapped into a daily fair value gap, right? You can see we do have a nice quiet reaction there. And price does want to move higher, right? So if we do close above this monthly open or close above these highs, we could definitely expand and get to this high, right? Let's see, probably could. Definitely need to wait this week. And if anytime this week from the 6th all the way to 10th, this week right there, if we do get a closure above this high, I would definitely expect ES to get there. All right, that's really what I'm looking for. And ES, I'm leaning more bullish on ES than on NASDAQ, right? So that is the high time frame view for futures. Let's move to gold, and we were quite on spot here, right? On gold, calling this move all the way lower here, and it was quite great. Let's just go to the daily time frame, and everyone who is really seeing gold as of now, they are short. All right, they just want to position shorts, but that's not really how it works because price is taken out sell side. All right, now this is not a random level, guys. I did give you this level when price was here. You can go check out the previous live stream sessions. So price has really moved here, and that's why we had the reaction. Not because I marked out the exact level, but because, which is right about here, not because I just mark out this low, but because there is true liquidity below this low. All right, so price has taken that out, and we have taken out another internal liquidity as well, right? We have a new monthly open, and this is just a relief rally, right? Like they like to call it, a relief rally in price, okay? And the first objective of such relief rallies are going to be the 50% of the range, which we have met. And I called all of this out in the university because I do have live stream sessions every day as well, right? So that was quite great to watch. But here, what are my expectations for gold? Definitely neutral, okay? Not bullish, not bearish, neutral at this point. All right, I was bearish on this move lower here, but now I'm going to remain neutral. Now, why is that? Go to the 3-month time frame and you have your answer right here. You see that we have a nice fair value gap, right? Let me just delete all of this. We don't need any of this anymore. We have a nice fair value gap right there, okay? Price has tapped it, and this is just a retracement, right? You see the 3-month time frame, you know there's a retracement. Now, can price move lower here, all right? Probably to this fair value gap. It definitely can, all right? It definitely can. I wouldn't really rule it out yet, but do I expect price to just expand higher from here? No, I do not, all right? I believe there's going to be consolidation, at least for a few months. This was your gold rally from 2023 all the way to 2026. And now I do expect gold to cool off, consolidate, 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 right? And nothing else. Moving to silver, we have the exact same thing here, right? And let me just go to the daily time frame to show you all this once again. This was the level we are looking at. From the CIST, we pushed all the way lower here. From this fair value gap, we saw this move all the way lower here as well. All right. So I'll delete this as well. We don't need this anymore. But what was 57.965 and why is price reacting out of it really well? All right. Once again, it's a true liquidity pool. That is why. But let me show you what it exactly is. You go to the 3-month time frame and we have your beautiful 3-month fair value gap right here. Now, what is this level? Just divide the gap by 50%. Go to the weekly time frame. And you see that there is a fair value gap right here. Okay, so this right here, that is the exact level. And that is why we are reacting out of this price point here. Okay. Now, every time you see here, you can see whenever you want to trade with order flow, right? So let's say you want to trade in the true direction of price. What is the higher time frame direction? Just stick to your monthly, weekly, daily. Look at your fair value gaps. Wait for price to form the fair value gap before you take a trade and understand clear liquidity pools, right? It's just that simple. You will really be able to plot the exact highs and lows before price moves, right? Now, moving over to Bitcoin, right here, we have a nice weekly time frame. And if you have any questions, do let me know in the chat or any requests. I will definitely take up on that after I'm done here. So price has moved off from this weekly fair value gap, which we marked out, and we have just reacted off a previous week's low, right? So clear liquidity pools, price just reacting out of it. Weekly time frame, really bearish. It does not signal any bullishness to me at all. I would say we are definitely moving lower to 52 or 48. This or 49, right? $50,000. I think that would be where we could definitely expect price to consolidate for a couple of weeks, right? Just like this, consolidate here for a lot of time, and then we could probably move up higher for a new bull run, right? So if anyone's telling you that price is just going to straight away move up, they have no idea what they're talking about. All right, just want you to buy before this another dump, right? Now Ethereum, the objective is met as well, but we have a nice reaction from sell side liquidity being taken out into this gap once again, right? You can see that this fair value gap was responsible for pushing price lower, but now when price is going to return, this is not going to hold anymore. All right, you can delete that. You can confidently delete that. We don't need to worry about that anymore because price is most likely going to retrace to the monthly open or to these fair value gaps here and then probably consolidate for a while. All right, now why do I expect that from Ethereum and differently on Bitcoin? That's because Ethereum has crashed a lot. All right, so I did call this move all the way from here, but you can see here we've crashed about 70%, right? So just a small retracement or another 20% pump or something, which will definitely make no difference in terms of price, but it'll definitely have a lot of impact on the emotions of traders, right? So they'll be really hopeful that price is going to move higher, right? They would expect it's going to be immediate, but it's definitely not going to be. I do believe that 1,300 is in play, and the other targets, of course, which I will discuss when price gets there. All right. So that is the high time frame analysis for the entire Forex, futures, commodities, and crypto asset classes. If you have any questions, let me just have a look at that as well. All right. Can you please check out on silver? Right. That was just silver. I believe, okay, I'm not able to spell the name, but yeah, that was silver. Really neutral on silver as well, right? Not really much we can expect. It's just a reaction from here. All right. Great. Let me just actually go into lower time frames and we can probably discuss how you can profile the week as well. All right. So this is your 4-hour time frame. I definitely expect the 1-hour time frame. I like it way better. So we have a nice open high low close, right? So I keep on saying that all the time. So what does it exactly mean? So we have, these are your 4-hour candles. These are your 1-day candles, right? And you have a nice Monday open. Now, what do you see here? You see that we have formed, and let me just draw it manually for you all. All right. So right there, this is your Monday's open, right? So this would be your open low, right? So which means that price has moved lower, and this is your, let's say, your weekly candle, right? That's what you're looking at. This is your weekly candle, and price has formed an open low, right? Now, after this low has been formed right here, okay, which is this low right there, what does price do? Price moves higher, right? So once price starts moving higher, this candle turns to be bullish, right? So we have a nice bullish candle at that time. Now, this bullish candle will start moving higher once price starts expanding, all right? So let's say you open your charts and it is 12 a.m. on Tuesday. What do you do then? You mark out this 12 a.m. and this is how the candle is at that time. So we have this defined low right here. Sorry, it is right there. Let me just draw this dot here. All right, so we have a nice defined low at that point. And what is price doing once it opens here, right? It's just moving higher at that point. And let's say you are waiting for your kill zone to take a trade. So 1 a.m. we do form this low right there. I'm sorry, this high right there. And your body is going to be all the way there, right? And then here it's going to move lower, right? It's going to move lower that way. So you have this is your weekly candle. This is really how you profile it based on where price is. And let's say price is right here at this point, right there. This is how your weekly candle would look. Now, what do you do at this point? You really need to look to your left, all right? That's all you do in price, okay? You just look to your left and you see when you look to your left that you have this high right here, right? So this is a clear liquidity pool right there. We have engineered liquidity here at 1 a.m. What does this mean? What does that mean that we've engineered liquidity? Quite simply put, it is that price did not take this high because liquidity is there, but it fell short of it, right? So which means that price will most likely move higher to take out this high and this high, all right? And why does this work really well? Number one, because there is true liquidity at this level. And number two, because retail really believes that this is true resistance, right? So they mean that price will not push through it. And that is the exact reason why it pushes aggressively, all right? So in this case, let's just take this example and hope you all understood the weekly open, high, low, close concept here. And let me just mark out this high. Go to the 15-minute time frame right about here and see what price does. Let me just close it right about here. Okay, this is 12 p.m., right? So what does price do here? Before expanding higher, what do? We take out an internal liquidity pool, which is your London's low, right? There. So price takes out London's low. We have clear equal highs here, and this is your liquidity pool, right? Which we just discussed on the daily time frame. So price just expands aggressively, right? Why does price move here aggressively at this time? Because 9:30 is equities open and price reacts quite aggressively. And of course we have low resistance liquidity here, right? So liquidity definitely matters, right? It's literally the first thing you're supposed to look at your charts. Whenever you open your charts, the first question you need to have is, why is price moving here and where should it go, right? Where should it go? Why is price moving here? So clear answer for you is, where is price going? It's going to liquidity pools. Why is it doing that? Power of three, right? Clearly, simply put, accumulation, manipulation, and distribution. So you're just trying to figure out, is price in manipulation or is price in distribution? That's all, right? That's what you're doing. And of course, you can use your 2-day opens to figure out if you're in discount or premium, right? And every power of three does use your 2-day open in play, especially if it's on the 15-minute time frame, because you want to expect price to expand on the daily time frame, right? So this is all it is, right? And for drawn liquidity, you're just going to use your previous day's highs and lows, or previous week's highs and lows, or your previous month's highs and lows, right? Really simple. And definitely you need to understand the narrative, right? That's all you will miss at the end of it. So how do you build your narrative at that point? Is just going to take experience and practice, right? The more you watch these charts, the more you understand why price manipulated, why does it need to do this, ask questions, and clearly get why price does these things, then it just becomes really easy, right? So on Friday, now any idiot on this chart would really know to not trade on Friday, because it is just a bank holiday, right? It's a bank holiday. You are not supposed to trade. You're not supposed to push buttons. That is the reason why price consolidates here, right? So just don't trade at that point. So you have a clear defined rule. The rule is quite simple. Don't trade on a bank holiday. Don't trade when Asia expands really aggressively. Don't trade when you do not know where price is going. And don't trade when price is not going to react quite well out of your liquidity pools. And it's just as simple as that, right? And don't trade when the time is not right. So you have clear defined rules, but as long as you follow them, you'll be good. All right. So that would be the end of the stream, but definitely, okay, I'll just go over another question. All right, Weeds, welcome back to the stream. Nice to have you here. For this current 15-minute chart, how do you enter from the CIST or OB? Because there was no pullback on the OB. I find that confusing a lot. All right, so great question. Whenever you have price expand aggressively and you do not have your change in state of delivery, right? That's basically what you're looking for. Let's say you don't have that. I would definitely just skip that trade. All right, that's the best way to go. But let's say you do want to take a trade, I would look at your fair value gaps. All right. So in this particular instance, there is a no trade. Definitely, I would definitely not take a trade here on this expansion, especially because we've taken out buy side liquidity and we've also expanded quite aggressively, right? So there's nothing left for me to target. So that is why I would just close the trade right there. But I'm sorry, and not take a trade right there, but I can show you an example. Let me just try to look for one. So let's say here, right? And you do want to take a short here and your change in state of delivery, you do have an entry, which is right here. So you do have a CIST entry. This would be quite perfect. And you also have your fair value gap, right? And you can see right there, we have a beautiful entry point right here. Price taps it beautifully before expanding lower, right? So you do get them a lot quite often. You definitely get your fair value gaps in your CIST entry points, but sometimes you don't, and you'd see this aggressive move and you would be quite unhappy with it. But I would definitely say change your mindset. Do you think that whenever price doesn't give you the entry but reaches the objective, pat yourself on the back, say that, all right, I knew price was going to get here. It got there. Great. I'm quite happy with it, but there's no entry, not an issue at all. I will definitely find one tomorrow. And you will definitely will, right? Because there are 5 trading days in a week. You have about 2 good sessions. So you have about 10 trading sessions, 5 London and 5 New York. So you will definitely be able to trade again, right? So just try to avoid these examples, right? Price will never be perfect and you will never be perfect, of course. So keep good risk management and make sure that you're not risking more than you can afford to lose. And don't really force yourself to know where price is going all the time, all right? Just follow the streams, right? Follow the streams that we have been doing since the past couple of weeks. You know that most of the time it was that, all right, price is going to move here. And I did plan it quite well. I just said that, all right, I know that price is going to move here. I should probably start a YouTube session and teach this to all of you with simple concepts. But there are times and there are months when I do not know where price is going, and that is quite normal, all right? Just can't open your charts and know exactly where price is going all the time. All right, so that will be the end of the stream, guys. Thank you all for joining. All right, okay, there's another question. All right, Weeds, and please, how do you know if price will move to C from FEG? Because sometimes it doesn't come there and move away. Sometimes it just takes the tip and moves. How do I take entry from each scenario? Right, good question once again, and this will be the last one before I end the stream. Right, so this is a good question. I believe Weeds is starting quite a lot. That's great. All right. So whenever you have, let's say 3 candles, right? And you want to be part of the move, right? Wait, let me just draw it again, probably with these. All right. So we have 3 candles, right? 3 bullish candles. Let's just consider that. And let me just explain what his question is again. All right. So question Weeds has is, we have a nice fair value gap, right? Right there. All right, never mind. Right, we just have a fair value gap. Now, his question is, how do we know if price is going to tap the 50% and move higher? And how do we know when price is going to tap the tip of the gap and move higher? All right. So I've done this for quite a while, so I have a very good answer for you. So whenever you see, let's say this is a reversal, right? Let's say this is reversing and we have price takeout liquidity here and we have a change in state of delivery, right? That's what this is. We just have a moving higher. Now, let's expect price to, let's say, target this high, right? Now, what's the first thing you do at this point? Whenever price opens again and moves lower and taps the fair value gap, just the top right there, the top part right there, take an entry, all right? That's my advice to you. Take the entry right here. Don't wait for price to get here. Don't wait for price to get here, all right? If you're using fair value gaps as entry points, take the entry right here, okay? This would be the best case scenario. Now, let's say price taps the 50% and moves higher. No problem. You're with the move, you know that price is going to get there. You have a high conviction that the liquidity is above. Price wants to move here. Great. All right. That's my advice on the entry point. Now, when do you know price is going to get here? We have price move lower, right? Bearish candle. We move lower, but we do not react. All right. Now, why do we not react? There can be a couple of reasons. Number one, there can be a news event in the following candle. So price is probably waiting for that. Or we are probably expanded quite aggressively. So price just needs to cool down. It needs to consolidate. That can be a reason. There is a couple of reasons, right? So let's say price taps the fair value gap right here and it doesn't move at that point, right? So on the lower time frames, when you move to your lower time frames, you will figure out that price is actually in a lower time frame, bearish power of 3, right? So we have a bearish power of 3 right here. So this is going on right here in your new candle, right there. So that at that time, especially when we manipulate, so we'll have manipulate right there, and then price will move lower. The next array the algorithm will look for is going to be the 50% of the gap. All right. So let's say price reaches the 50% of the gap, which it will at that point, and it doesn't react again. Then we're just going to expand lower to fill this fair value gap. So that is really how you're going to know that price is not going to probably react at the top of the fair value gap. Is going to go to the 50% and the end, right? So that is why a fair value gap will always have 3 levels, right? It's going to be 1, 2, and 3. But it all depends on what price is doing at that time, all right? So that's why when you combine time and price, this becomes quite easier to take a trade at that point, right? Because executing and learning is completely different, right? So that's why I give you the execution perspective first, that I would say just take the trade here because probably gets here and then we probably move higher, all right? So that is basically what happens. All right. So thank you all for joining, guys. And hopefully I'll see you all once again in the next week at the same time. So do take care and have a great weekend. And I believe the weekend's over. So I'll probably speak to you all once again. I mean, if you're in the university, I'll definitely speak to you tomorrow. All right. So take care and stay safe, guys. And bye-bye.